Today we are going to be looking and learning about trailing stop orders, right? You probably heard about them. They're considered to be one of the most effective tools in the arsenal of every trader, and for the most part, rightly so. They're indeed a great trading tool. It can easily improve your trading outcomes, and it doesn't take a lot of time or effort to master, despite the seeming complexity. And today we're gonna, look at the trailing stops and see what they do, how do they work, to actually, unpack them and to understand them. And in reality, they're not that difficult to understand. So let's begin. Today we'll be looking at them before we actually look at the actual trading interface as exemplified by Good Crypto. We'll be looking using some illustrations that they have in their article, which also, if you want to learn about trailing stop orders, will be very useful to you. It's on our website, right? So it's goodcrypto.app, and just here on the very bottom of the side, you'll see the trailing stop here under trading strategies on each page. So basically, that's where you can learn more about them. But let's dive into them. So what is a trailing stop order? From the name of it, the word trailing means that the order trails, or in other words, follows something, right? So what does it trail or follow? As we are crypto traders, right? So it does trail or follow market price. So the basic idea, without don't bother yourself with reading this or looking into this picture. Like, forget about it. Look at the ceiling or the wall. Just try to concentrate on what I'm saying right now. The basic idea is easy. When you are buying or selling something, there are oftentimes it happens that the price goes in your direction, like in the direction that you want it to go, and it does so for quite some time. And you want to buy or sell at that moment, but you don't want to do it right now, because with each kind of each second the price improves for you, so it improves your outcome. So you don't want to basically send the order right now, but you also, right, so you don't want to send a market order to buy or sell. It will be executed right now, but you will lose that additional upside, right? And on the other hand, you're afraid that you might, if you expect that the price will continue to move in your favor, you can also set a limit order somewhere, down the road. But the risk there is that if the price falls short and doesn't reach the limit order, then it won't execute. So trailing stop order, that's kind of tries to do both. It follows the market price and doesn't execute as long as the price keeps moving in your favor, in the direction that you want it to move. But at the same time, it ensures that once that move kind of ends, so price is not longer moving in your direction, in your favor, and starts moving in the opposite direction, it makes sure that the order is executed and you are actually, you get your order. So let's look at the picture now and the illustration of what I've just said. So basically, look, let's say we're looking at the trailing buy order. Of course, you can use trailing stops for both buy and sell orders. Let's first start with trailing buy order. So what you have here, you have market price, right? Supposedly the market price you expect, so you want to buy something, right? So supposedly the market price kind of is relatively flat right now, but you expect it to fall, right? So you want to buy something, but you expect that in the immediate future it can get lower. So you don't want to buy here, right? You want for it to actually to fall a bit and maybe enter once it has fallen. So what do? You send a trailing buy order that will follow the market price at some distance, which is called trailing distance, right? So that trailing distance, the distance at which your order would follow or trail the market price, is defined by you. So you choose, you can, go as low as 0.1%, or you can, choose 1% or 10% or 20%. It depends on the instrument and the volatility, what your expectations regarding the markets are. But basically, you choose some trailing distance, and we're now right here, right? So at this point in time, the market price is here. You send a trailing buy order. You choose some trailing distance. It's defined here. And when you send the order trigger is here. So this line denotes the order trigger. So price is here. Your order trigger is here. As you see, as price kind of time flies, the price doesn't move, so the trigger follows the market price or trails the market price and stays at the same trailing distance, right? It always stays in the same trailing distance if provided that the price goes in the direction. Now you see here the market price started to move lower. What happens with the trailing stop order trigger? It moves lower with the market price. So as I said before, the market price goes in your favor. So you are buying, so you want the price to move lower, right? So as long as the price moves in your favor, trailing stop order would follow the market price or trail the market price and stay at the same trailing distance from that order. So you see the distance between the trigger and the market price is the same. However, once the market price moves against you, or not in your favor, but in the opposite direction, so you see here the market price started to rise, the trigger doesn't move, it stays in place, right? Market price kind of went up a bit, it didn't touch the trigger, so the order didn't execute, and market price started falling again, and the trigger started moving down with the price again, keeping the same trailing distance from the market price, right? So the market price went down, 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 and the trigger went with it, down with it, and here the trend changed and the market price went up. The trigger remained in place and didn't move, right? Well, again, when the price was moving in your favor, so you were buying, the price was falling, the trigger was moving down, following the trail in the market price. Once the market price moves in the opposite direction, the trigger stays in place. And once the price went higher up enough to touch the trigger that stayed in place, of course, the trigger here, the order was triggered, and basically the system sent a market buy order. So you bought here. So again, right, you started here, you sent a trailing stop order, trailing stop buy order with trailing distance of this much. The price went down, the trigger went down with it. Once the price stopped moving down and went up, the trigger stayed in place, and once the price crossed the trigger, the order executed and the market buy order was sent. So basically, that's in essence how the trailing order work. So what did you achieve here? You might have bought here with the market order right here, but by sending a trailing stop order, you actually improved your price a bit, right? So you bought here, which is lower than the initial price was, right? So having had the price not went up here but continued to move down, the improvement to your buy price would have been even greater. So that's in essence trailing stop order. Again, it follows market price at some predefined distance that you define. It's called trailing distance, and the order trigger moves with the price as long as the price moves in your direction. For the buy orders, that means if the price falls, the trigger moves down with it, but it stays in place and doesn't move down or up if the price goes against you, right? If you send the buy order and it's going up, and once the price hits the trigger line, the order is executed, right? So that's trailing buy order, and by the same token, we can look at their trailing sell order. It does exactly the same thing, just in the opposite, right? So you're trying to sell with a trailing sell. So your goal is to sell at, if you're selling at their highest price possible, right? So usually, that's kind of what you usually want. So again, here the market price was here, and you set the trailing sell order. It trails or follows the market price at some predefined distance, trailing distance, right? But as you can see here, of course, it follows the market price from their different side, right? Remember, for the buy order, the trigger was above the market price, and for the sell order, below market price. It's kind of logical if you think about it. Just don't bother about it too much, right? So again, as long as the price keeps moving in your favor, so for sell order, that means higher, right? So you want to sell as high as possible. So when the price is moving higher, your trailing stop trigger basically moves higher with the price. And once the price goes against you for sell order, that means falls down, the trigger stays in place. And here the market price crossed the trigger line and the market sell order was executed. And again, here, what did you achieve? You could have sold here with the market order at this price. By sending a trailing sell order, you improved your sell price to here, right? So you got this much of improvement in the market price. So that's pretty much how the trailing buy and trailing sell orders work. So let's now look at the real example, or look at the trading interface. So we're looking here the Good Crypto app.
Okay, guys, so we're now trying to send, we'll try to send a trailing stop order. We're now at FTX exchange at BTC.USD instrument. Let's see what's best. Maybe, okay, the price is functioning. Let's try to buy. Uh, let's try to buy with a trailing stop. So let's set trailing distance of 0.3%. Just something that you can see here. That's where the price currently is, and there's a trailing distance above it. So let's just don't mind the other fields here in the order sent form. These are advanced trailing stop features that we'll be discussing in other uh, other circumstances or in the following video. So let's just hit send, and let's see. So that's a trailing buy order. So what's going on here? So that's where the price was when we send the order. We're trying to buy. That's where the trigger is. You remember from the video. So if the price moves lower, then the trigger will follow it, right? So it will stay at the same trailing distance, the chosen trailing distance. So you see here the price is moving lower, and you see what's happening to trigger. Trigger is moving lower as well. As now the price rises, it doesn't actually move, right? So you can see here, and the price rises, it goes against you, doesn't move, and if the price hits the trigger here, the order will execute, right? If the price moves lower, okay, the price moved higher, so we've seen a small improvement here, but it still was there. Let's see, maybe repeat it, and but actually reverse. Let's try a trailing sell order, right? So now we see the trailing distance moved under the market price. So let's send it. Okay, now you see we're trying to sell, right? So the trigger is below the market price. We're trying to sell at the highest price possible. So as the price goes higher, the trigger will follow it, right? So as long as the price continues rising, the trigger will keep rising with it. If the price moves lower, it will stay in place, and if the price touches the trigger, it will trigger, right? So you've got some improvement. So the trigger was here initially, it moved up a bit, but now the price is actually not rising but going against us. It's now it's going to maybe execute. No, it didn't execute. Okay, here we go. It moved up. So we've improved the trigger a little bit more. Maybe we'll see a good strong move up so that there will be easier to. So you can see here, right? So the trigger is moving up with the prices. Here we denote in kind of the maximum, right? So it's a local maximum, that the maximum price that was reached after the order was sent. So if you see where the trigger is, so the maximum, the trigger is at the chosen trailing distance from the maximum, from the local maximum reached by the price after the order was sent. You can see here, right? As long as the price stays between the maximum and the trigger, basically they don't move. If their new maximum is found, meaning the price moves higher, then the maximum moves higher and the trigger follows it. So let's see, right? So that's kind of how the trigger, how the trailing stop order will work. Maybe now the price is moving down. No, it's not moving down. So yeah, so that's something that you can basically always endlessly look at how the fire burns, how the water flows, and how the trailing order trails the market price, especially if the price is going in your favor. Believe me, it's a fascinating view, especially if you see the real price performance. Here we've seen some improvement of the trigger, but as you can see, we've sent the price here, the order when it was here, so we could have sold here. If now the order triggers will still sell lower than we could have sold, so we need, for the trailing order to make sense, we would need the price to go a bit higher still, then we'll have improvement. So that's kind of, now you can see the risk with trailing stop order is that we could have executed here, we did not. If it executes now, then will not improve our sell price, but rather sell at a lower one. But that's, of course, I've chosen a very small trailing distance of 0.3%, just to give you an illustration of how it works. Normally you would choose a higher percentage, so to catch larger trends, and you wouldn't be looking at the 5 seconds 15 seconds candles. You'll be looking at maybe 5 minutes and 1 minute. As you can see, 5 minutes candles, you see that's a very small trailing distance. It just doesn't make any sense. Maybe on 1 hour you can see the trend. So with trailing orders, you want to catch moves like this or like this, right? So that's what you want to catch with trailing stop orders. But we're now looking at a very small trailing distance with a very kind of low candle resolution, 15 seconds, just for the illustrative purposes again, right? So you can see the price still fluctuates. The local maximum after the order was sent was reached here. Maybe it will get a new one right now. We'll see. So the trigger was improving as the new maximum were found. So the local maximum was found here. So that's the highest point the trigger reached, and it's in place. Right. So that's the trailing stop order in a nutshell. While it continues, continues following the market price, let me maybe pause for a bit and talk about the situations when or scenarios when and why you would want to use trailing stop orders. So as the trailing stop order is trying to improve the price of the order execution, right? Basically trying to find and write the trend. So you can look at, there are two different scenarios. First, you can use trailing stop orders to establish a position. For example, that's what I'm trying pretty much to do here. I'm trying to establish a short position. I'm selling BTC basically, right? So my idea is that I want to sell both at the highest price possible, and so the to right, and to choose a moment when the trend changes, right? So I not only want to kind of like I want to sketch a strong move up, and when that strong move up kind of changes and the direction changes and the trend changes, right? That's when I want to actually to sell short. That's when I want to enter a short position. And that's what trailing stops are trying to achieve. On this, by the same token, if you're trying to establish a long position, right, you want to buy something, you want the price to move lower, right? So you want to ride, you don't want to, if you feel right now, for example, right now the market is wobbly, it's late June 2022. The market is really wobbly. Everyone is worried that the Bitcoin would go lower still. So you don't probably, if you establish a long position now, you would rather send a trailing stop order with large trailing distance of maybe 10 or 15%, so that as long as the price keeps moving down, it will follow the price down and improve your potential entry price, right? But when the trend changes, so the price stops moving lower and kind of reverses and moves up, that's when you want to enter. So basically using trailing stops to enter a position not only allows you to potentially improve your entry price, but also to choose to maximize the probability of entering in the right moment of on time when the trend changes, when the trend kind of, so you're buying at the end of the downtrend and the beginning of the hopefully what will be an uptrend, and vice versa. You're selling at the end of the uptrend, right? If you're shorting that, it's hopefully will be beginning of downtrend. So you can see here. Let's go back to the order. You can see here there was a price moved a bit higher than the previous maximum reached here, and you can see the trigger immediately reflected that it moved higher still. So that's trailing stops, right? We'll see. Okay, now the maximum was breached. Price moves higher still. Trigger continues to follow the price up. Oh, you can see here. Okay, that's a very good. Well, now we're almost kind of made it worthwhile. So again, we sent a sell order somewhere here. The price was here. So what triggered now is almost here. So now even if the price trend reverses and goes down, we would sell pretty much at the same price we could have sold here. So, but we'll see. It might be as well that the trend continues and the trigger improves. But the biggest, of course, once again, you don't want to use trailing stop orders to catch those small trends, those small trailing distances. You would rather use them with large trailing distances and to catch trends which can be seen on the graph, something like this. So these trends and these trends are the prime candidates to be caught with trailing stop orders. Okay, so now we've seen what trailing stop does, how it works, right? The basics of it. We've learned that we can use them to enter positions, right? To enter positions and possibly possibly better price than compared to entering positions with market order, but also hopefully at the right point in time when the market trend reverses. So again, if you're trying to buy with trailing stop orders, so as long as price keeps moving, down, trailing stop won't execute, and when price stop moving down and start reversing and moving up, that's when the buy will be executed. So potentially you would have improved your enterprise and entered at the very moment that the trend reversed. And the same here, basically when the price, we're trying to short basically here to enter a short position, the price goes up, you don't want to, to short on the uptrend, but when the trend reverses and it will, start moving down, we will enter a position, hopefully that will give us a better chance of making profit on the short side, right, when the trend reverses. So that's basically what trailing stops do in a nutshell for entering positions. But it's in the same token, you can use them to exit positions as well, right? So once you've bought something, you can imagine, I'm not trying to short this Bitcoin, but imagine I've bought it and I have Bitcoin on my balance. That's the other way to look at it, right? So I have this 0.0001 Bitcoin, and I want to sell it, right? To sell it at the highest price possible. So that's pretty much exactly what this order does. So instead of selling it here, I want to see whether the price goes higher now. So if I sell it here and the price moves higher up, I wouldn't catch that upside. I don't want to lose that upside, potential upside. So I'm trying to basically catch it, and basically we'll see, right? So if the price continues to move up, uh, of course there are fluctuations, right? So it goes down a bit, but as long as I've chosen the right trailing distance that is higher than those kind of small fluctuations, then I will still be still catch the general trend up. So again, you can use the trailing stop orders to exit your positions. If you have a long positions, you bought something, you can send the trailing stop sell to exit that position. If you have a short position, then you can use a trailing stop buy to close the short position. And the same logic as with entering positions applies to exiting positions as well. Trailing stop would maximize your chances to catch the price trend which is moving in your directions, and basically not to leave additional upside on the table. So, all right, so if the price continues to move in your direction rather than exiting right now, you will ride the price trend, and when it kind of finishes and it reverses, that's when you will exit your position with the trailing stop order. So that's in a nutshell what uh, trailing stop orders do. As you can see, this one is still going, right? There is still chance that will improve yet, as they're continue to improve. The price seem to be going up as well. So that's pretty much the trailing. So once again, uh, let's recap what we've learned today. So trailing stop orders function in a way that the trigger of that order trails or follows the price at the chosen trailing distance, and it moves with the price as long as the price moves in your favor. So for a sell order, you want to sell higher. So if the price moves up, then the order trigger will move up with the price. But if the price goes against you, it will stay in place, and the price touches the trigger, market order is sent. So that's pretty much how the trailing stop order works. In the next video, we'll be looking at more in detail of all the features of the trailing stops that Good Crypto offers. Beside the basic features, there are a couple of advanced ones that are, some of them can be found in other terminals, some are specific and unique to Good Crypto. Okay, that's pretty much it. Let's just look here that we've got another price improvement. Here is the new max was found here, so you can see, right? So that's the improvement that the trailing stop order allowed us to have. Okay, that's it for this video. Thank you for watching, and stay tuned for the following videos on trailing stop orders. There is a lot more to unpack here. Thank you.